running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, Quasar Markets Live. Traders, how you doing today? BigBeat, how are you doing today?
Hi, welcome to Fed Day, man, for those of you who celebrate.
We all
Get
celebrate,
it over with.
right?
I'm tired of it.
You're tired of it? It hasn't even started yet. You haven't even got the hubbub going yet. You got another 6 hours, 7 hours of this.
Oh, Jesus. You know, look, I get it. I understand. But the truth is that if you think about it from the perspective of investors, right? The shenanigans have already started. Look at this morning's movements already. People just don't know what to do. And if you don't know what to do,
don't.
That's on you, right? You should know what to do. We've been talking about it, right? I just don't find anything here interesting to me, right? There's nothing. The markets are over whack. Look, I don't know if you got it on your banner. I haven't looked at the banners this morning, but housing market. I mean, if you look at the housing market this morning, and I have been talking about this housing market for a while now, right?
I don't know which part. You might not like my thing then, because mortgage rates hit 3 years low today.
Yeah, okay, whatever.
That's what I care about in the housing market.
But is it really going to affect anything? Let me put this down. Let me put this in perspective. Single family homes permits this morning down. Single family permits down 2.2%. Multifamily, that's apartment complexes, down 6.7%. That means rent has gone through the roof, and a majority of people do not live in homes. They rent, right? You know, that is a problem. And so mortgage rates are coming down. If people don't have freaking jobs, they're not getting out of they're barely making their rent. They're not going to buy a home because they got to have money down. Then they got to. It's a mess. We have a mess on our hands, right? All right, let me get right to it then. 30 years, 6.49% is the average. Is that really down from? Is that really up? Is that really? Where is that? Where is that in all of it, right? But we know that the average is right around here, right? It was around 7%. But this hasn't been what Trump has been talking about. Trump has been saying he wants to lower rates. Now, everybody thinks that we're going to have a 25 basis point cut today, including myself. But here's what I'm worried about. I'm worried about an intermediate cut because, that's not going to happen, BigBeat. That's not going to happen, BigBeat. That's not going to happen. I heard that 4 times today. All right. President's got 3 new people on the board.
Yeah, I'm going to say either CNBC or Market Watch. One of those two believes what you're saying because I read an article that exactly said that. Look for that because he's got 3 of them in his pocket.
Then there you go. I didn't see that this morning, but I will tell you that I'm very nervous about this markets. And you know what? I will tell you that when markets make me nervous, I don't like them. I don't like, and that means I'm either too heavy or it means that I'm positioned wrong. And I don't think I'm positioned wrong. I might just be too heavy. So I'm going to be looking at my portfolio after today and maybe, the long-term stuff and start to move things around. As you know, most of you know, I moved into European stocks and Asian stocks back in January, February, March. And I was very smart about that while keeping some of my, obviously U.S. stocks. I have a portfolio of that. But I'm looking for the next level of all this. Where is the next investment that's been beaten up that could come out of the doldrums and stuff? Good morning, Steve. Good morning, Marilyn. I think I saw that now. Let's talk about that for 1 second, Howard. You got something on the plate that I haven't seen the banners yet. What do you got on the plate first?
Oh, you can start wherever you want. I mean, I have Fed cut day, so today the macro is Fed cut day, so that's.
Let's talk about
number 1. I mean, yeah. From there, I have volatility watch with what the option pricing is today, dollars and bonds, the pre-Fed positioning. So
Yeah, okay. That's all good stuff. Then let's start with that dollar index. Letting us here with us 96.75 on the Dixie. We're still selling off. The dollar is still selling off. The president said he wanted a lower dollar. Did he want it this low? The next level of that is the volatility of today. The next situation here is the international side of things, which is okay. Our dollar's cheap. Are people watching? Options pricing, the Fed risk, yeah, the VIX, VXX. We talked about that. A lot of people that are around me are in the VIX. I think yesterday was a nice little pop to the upside. I don't know where we think we're going to be earlier today when 1 o'clock rolls around, 2 o'clock rolls around, 3 o'clock rolls around. Those are the 3 times to look for, right? Pre, during, and after. I don't think any of it matters. I don't think any of it matters. And I'm going to tell you why. Because we have a lot of issues going on around the world that are making me even more nervous. Israel's an issue right now that's getting worse. NATO is becoming an issue with Russia. We have bigger fish to fry and bigger problems. And housing is a massive problem. Because why is housing a massive problem? It is the biggest asset class in the world. There's no bigger asset class, not oil, not gold and silver. It's real estate. Real estate is everywhere, right? So, and when to finance that real estate is the bond markets. Okay, so when you have a mess up in the bond markets, you don't know which way the rates are going to go. That this is all starting to come together, right? We might have a calamity coming. Now, I don't know. The world's fine. See, relax. Everything's fine because the stock market's up. The stock market is not the economy. All right, folks. When I talk about that all the time, the market can be more irrational than we can stay rational. All right. Okay. And it'll clean your account out faster than you can say, holy Jesus. Right. Let's talk about the next level of this. What do we need to think about? All right, so we're talking about AI. We're talking about biomedical. We've been talking about all those things over the last 3 months, right? And all those things have come to fruition. Almost all of it, right? Silver's come to fruition. All of it. But I don't think about when I invest. I don't think about what's going on right now. I think about what's next. How am I trying to invest? And so when I do that, yeah, of course. You have to think about the next level. What is next, Howard? And for me, what's next is the geopolitical side of things. So I'm looking for areas that are not in your awesome words here, scorched earth. I'm looking for areas in the world that don't care. Okay, let's talk about that. Australia is looking at all of us going, what in the world? We're glad we're our own little continent in the area, right? Islands are where everybody's going, right? And we're seeing that. I mean, look at Royal Caribbean and Carnival Cruise Lines. They're exploding. I mean, the stock price is outrageous, right? They're buying islands and redoing islands. They're buying the Bahamas, right? So that means that the rich are getting richer and the poor are getting poorer. That's what I'm saying. Rent has gone through the roof. Let's go back to the beginning. Rent's gone through the roof, so we have a housing problem, right? Housing itself, buying a home, is at the most unaffordable level in the history of the country. It doesn't mean the rates are the highest. It just means that people don't have jobs or can't afford the home because the home price is out of control. Rates are out of control. We have a Fed that's no longer, it's becoming political. Right? There's no separation. We have a White House that's just doing tariffs that are out of control, right? It's messing up everything that's going on. We don't know what to buy. Believe it or not, groceries, and you mentioned this the other day, Howard, groceries, the inflation is off the charts. It's unaffordable, right? So the actual average person on Main Street is hurting. And yet Wall Street is like Rome fiddling right now. It's like Nero having a good old time with his fiddle, right? And why do we care? Well, we should care, right? Because we have to think about the future. As I just said about 5 minutes ago. All right, where do we invest? All right, because solar's not it. Solar and wind's out. Okay, do we invest in nuclear? Okay, we've invested in nuclear. We made tons of money in nuclear. What do we do? How do we invest here? When I get to this point, Howard, and I go, all right, housing's a mess, and I can write all these things out for everybody if it makes it easier. If I say all these things are a mess and the markets are going up, something's wrong. And in my mind, when something is wrong, that means I need to reposition. And I'm repositioning to the short side because I think people are starting to realize that you can't keep gambling with your Robinhood accounts and hoping and praying. I just saw a commercial for somebody, for a company that I actually respect, with a freaking bull going down down Wall Street going, for those of you who want a ribeye, join us because we're going to teach you options and how to make a bunch of money in options. That's gambling, folks. That's not investing. That's not investing in your future. That's not helping you get the next level. All right, you want more dopamine? Great. I got a Hard Rock account. Okay, fine. That's not investing. And what you're finding out right now is what we're about to see here in the next. And you know what? I wasn't sure about what Dan Niles was saying, but I think he's right. I think we're about to see a messed up market here coming soon. And look, I don't like being a soapbox like this, but my heart is with everybody out there. I don't want to see this happen. I've seen it happen 100,000 times in the market. It's like that. As I always say, the price is right. Watching that mountaineer go up the mountain and then kaboom, and it's like, well, you didn't tell me. Yeah, we did. Yeah, we have been telling you the market's going. Oh well, but you didn't give me the exact date. Okay, hold on while I pull out my crystal ball and tell you the exact date when J.P. Morgan and Goldman Sachs and the big boys pull out all the stops and take you out. Right? It's going to happen. As I always say, Howard, and I'll leave it at this: retail may win a battle or two, and they do. They win battles all the time, but they'll never win the war. They will never win the war. They don't have the money in order to take them out. So here we are, Howard, and I'll leave it at that. All right, I'm off the soapbox.
Well, there you go. I have to laugh because my discussion with my crypto room today is on Dow theory, which would fall right into everything you're talking about.
There you go.
With think about it as one puppet master, and that's the institutions.
Right.
So it's Steve Flanagan. No, you're on soon. You can't run into a storm shelter right now. But get ready, buddy. I mean, you're the perma bull. We can't wait to see this go on at 10 o'clock.
And I'm gonna look at my schedule, see if I'm good. We got Alan at 10:30, so I say bring him on when he's ready because I think today is an important day. We're not going to just see Fed. And the answer, we already know the answer. The answer is 25 basis points. We get all that. But when I look at the Bloombergs and the Reuters and the Wall Street Journal reporters and CNBC, what are they going to ask Powell? And how is he going to respond to that stuff? Because he's going to have to respond to Lisa Cook. He's going to have to respond to, well, did you bend the knee to the president? All right. Well, how are you handling? Okay, are you ready to get your butt kicked in March? I mean,
are there dissenters, and where are the dissenters on which side? Because we're going to have them on both sides. We could do. What do we see? Yeah, it's all going to be about what. That's what I said also in my morning watch list. It's watch what he says. The number's baked in, and the number's already been baked in. It's been baked in and baked in and baked in and triple baked in. So if he just stays fairly neutral, then I think it's nothing. And it matters if he goes scorched earth on the president, then who knows what happens.
Right. He goes scorched earth today on the president, and we have, and somewhere in between these three new members, including the ones that he thinks he has in his pocket. On top of that,
yeah.
Okay, you know what? I'm calling for an intermediate meeting.
Something. Yeah, right. Like I said,
goes, what?
Yeah.
What? And then. Last time that happened, the market crashed, right? Every time we had an intermeeting, because it tells you the Fed's wrong. Not only we know the Fed's wrong, but they are.
Everybody knows the Fed's wrong,
right.
Yeah, without a doubt. And I do think, my warning to people would be, personally, to me, I see more downside coming out of today's FOMC than I see upside. The opposite of like Jackson Hole and all that type of stuff. I don't see what Powell. I mean, I know he could say stuff that could move it in the right direction. I just don't think the Powell puts today. And that's not like me. I'm the king of the Powell put. You know, it usually is the bottoms in when he starts talking, and I don't feel that way today yet. I will tell you on the crypto side, Steve, money's sitting on the sidelines. In other words, open interest on those perpetual futures you hate. People, they have been pulled way back. Leverage has been pulled way, way, way back. So they're waiting to see what they say today. For sure.
Movements, right, Howard? I mean, I did see one big whale move again this morning.
That was over the week. Yeah, that was yep. Same gentleman or gentlewoman on Hyperliquid sold, and they can, but they're not a seller. They're a transferer, because what they did is they sold $4 billion in Bitcoin and bought $4 billion in Ethereum last time. So they just, you know, just like you reshuffle and I reshuffle, they just do it with a much bigger amount of zeros at the end of their order. Yeah, so that's, you know, that's been the case there, but we have seen distribution. Again, you know, I saw our friend from Poland. He's saying that we're 97% at the top on crypto right now, Adrian. I saw he's calling the top is going to be in the next 40 days. I don't agree with it. I'm actually going to discuss it in my room today also, and more tomorrow, quite honestly. You know, he's a Twitter hype guy. And that's
a big fan, Adrian. I know.
Yeah, I think this is more for engagement than it is for there. He also puts in the caveat we could have a blow off top to 200K before we pull back.
That's
and then the bullish scenario from other people are we're going to hit $200,000 and pull back. So it seems like the bears and the bulls agree with one thing. 200 comes before the pullback. But I have to laugh.
200,000, I'll be like, I'll be dancing.
Yeah, I'm ready for the pullback at that point. At that point, the question is, quite honestly, that I'm going to talk about. I think the pullback is more in line in what we see in gold pullbacks than what we've seen in crypto pullbacks.
Here's the question: if we go 200,000, do the big whales, the Novogratzes, those sailors, did they sell too?
No, sailors never sell. I mean, everybody else is in a different boat. Novogratz is already Novogratz is rumored to be the person behind that transfer from Bitcoin to Ethereum.
Okay,
because he went on CNBC and said that's what's about to happen. And then within hours, those transfers happened. And he had a report for the SEC that he did, but this could be personal holdings.
Okay.
So, no, what we're seeing is the difference is the old OG whale was exactly that, the Bitcoin whale in Asia or wherever, the Winklevoss brothers. And now that is institutions. It's, you know, it's all of the different micro strategies and meta planets and the non-sellers that now are the whales. So there's a little bit of a different structure. And the institutions like Fidelity and BlackRock that not only have the trading of it, but now have put it into their funds, they're not going to do that.
Yeah.
It's interesting. There's a lot of things that you could say right now from a fundamental point on crypto too, because Bitcoin perps are about to go live on CME and CBOE. You know, so another thing you don't like, but they're coming. Perpetual futures are coming to every part of the world, and they're not just going to be crypto based. This is just the test. You know, last time that the CME listed futures, we went down 30% in a matter of a month because the institutions had a way to short us. Now they've had a way to short us already. So the idea or the prevailing thought is it should be a nothing burger again because it's just changing how they'll do it. So getting back to the regular market, Steve, one of your favorite companies, the Duck, getting a little bit bigger with Web2 and IP digital agreement there. What do you think about that? I know you're a big fan of M&A and you're a big fan of the Duck.
Yeah. The Duck, you mean the mouse?
The mouse, rather, yeah. Well, I'm a Donald Duck guy, so.
Yeah, okay, I like that. All right,
to me, it's the Duck.
For me, you know, I hate to say it, but for me, it's a different person over at Disney. It's Tinkerbell's my fave, but
oh jeez, you'll never grow up.
I'll never. I'm like Peter Pan. That's my nick. Most people know that's my nickname. Okay, so I like this a lot. I think Disney's protecting themselves because obviously Mickey Mouse is now over 75 years old, and that's an issue, right? So their intellectual properties is getting a little bit out of whack. It's going to get worse and worse as your Donald Duck now comes off next, and Pluto and Minnie, and so I understand that. In fact, the first time that Mickey comes off, right, they turn him into like a criminal, and he's a slasher. I don't even know what that was all about, right? So nutty. I do understand that. I'll tell you, the parks are just slammed right now. You can't even go to the parks, and when the holidays come around, it gets even crazier over there. So no, I don't see. I love this side of things. I like Webtoon, and I think Disney. And I was just seeing my own godkids not too long ago, and is Disney still a thing, right? Oh my God, can't wait to go see Mickey Mouse. Okay, all right.
Yeah.
Disney still is.
No, still definitely a thing.
Right. So, all right. I look, this is an animation that's over close to 100 years old, 95 years old, right? And it's still popular. And it was interesting. I was watching Hulu. I was watching Thomas Jefferson biopic on Hulu. If you haven't seen it, by the way, folks, Thomas Jefferson Hulu is really good. I think it's on History Channel if you need to get the History Channel. And the one next to it was Disneyland Tokyo. Right, so it kind of reminded me about it's the international side of things, and I'll be in Tokyo soon, and I think I'm gonna go check it out. I have not checked out Disney World over there, so I think I'll just just go check it out. But
my nephew has gone to almost all of them. He's done France, he's done
Shanghai.
Japan.
Yeah. Okay, yeah.
Yeah, he's
awesome.
He travels just to do it.
Yeah,
but they're going to launch a platform with 35,000 comics, Marvel, Star Wars, and others. Disney has agreed to buy 2% of Webtoon stake there, a non-binding term sheet, and Webtoon shares are up 39% today after 80% after our surge. So markets like it for sure. Is that one you'd be looking to short maybe today, Steve?
No, I don't think so. I'll tell you something else I think I like too. The whole animation thing is getting very big. And I'll tell you another thing. Kindle, Amazon, the Kindle is going to the color side, with the new color soft and all that. They're coming out with new stuff coming out here in the fall in about 2 weeks. I think it was like next week actually now. There's a good chance the new Scribe will come in color too. And I've seen where the animation, the comics and the manga and the anime is all in color, as we all know. Will also be on all of those Kindles as well. So they're looking for ways. So animation, there could be a big animation fight as kids now go to gambling in stocks and watching animation, and that's their life, and smoking weed in their mama's bathroom. Yeah, okay. Yeah, look. The world's going. I mean, look. I don't want to be the guy that says get off my lawn. Right? It's not my thing. Right? I'm the opposite. I'm the one that fosters. I love it with technology. I mean, my whole house is technology, but we have to think about it in the philosophy of people. Right? As what are they thinking? Where are they going with things? And how are they doing things? And they don't want to use the U.S. dollar. They want to use digital, and they want to look at comics. And they like weed, and they like to bet on sports, and they like zero DT. They like that dopamine, right? And so that's what's happening right now. And in social media, we've got to think about it. You just saw where ChatGPT, where Sam Altman just said that they're going to remove all talk of suicide on ChatGPT.
Oh, wow.
Right?
I did not see that.
Right. So this whole thing is becoming, there you go, StubHub. Right, they got to go to the next show, and I'm no different. Right? I want to go see all the music. It's all.
So, what do you think about this one, Steve? This is the first. I mean, I know it's a tech company in theory, but it really isn't. Let's face it. It's the old tickets. It's a ticket scalper. I used to work for one when I was a kid. IPO priced at $23.50. Raised 800 million, 8.68 valuation. What do you think here? You think how is this going to go today?
It's going to go well. There is an appetite for it. I don't think it'll come out at $25. I think probably by the time it comes out in the cash market, it'll be somewhere around 40, 45. Let me guess.
Oh, wow.
42 maybe. It could be in the mid 30s, but I could go higher or it closes today. But do I think it'll sell off? Because there's a lot of people that have been holding StubHub, insiders holding it for a long time that can sell. Meaning those Goldman Sachs and JP Morgans of the world that sold into those those people. Yeah, it's going to be a big fight. StubHub is about one thing and one thing only. StubHub is about the actual artists themselves. Do they use StubHub? Do they like StubHub? Will they try to say, don't use StubHub? If you use StubHub, I won't. Live Nation, is Live Nation going to be partnering with StubHub? And, there's a whole ecosystem around that. Yes, but you're right.
Yeah, the thing that I would say there, as someone who's looked at this, because blockchain technology is really the answer to this, because you could make it where the artist got a percentage of any resale of a token, the token being the ticket, the NFT, whatever it is. And some have really tried, and backed by people with money, have tried to do it. And there's no interest, but because there's no network effect. StubHub has such a huge network effect, the same way like an Uber does, that they just control that area. So my thing is, I'm not a fan of StubHub because I hate their fees, but I do think that they are a company that has a pretty big moat in that area, and where technology should be changing, and they've kept it away.
Yeah.
Fuse just popped up here a little bit. Nice little pop to the upside. We were down, now back up. We are about 2 minutes from the open. So far, tick is slightly positive. Advanced decline is 900 to the upside. Q is now set to open even, SPY even here. So, not a bunch. Do you think we have a quiet start to the day, Steve? Or do you think we see some fireworks right off the open?
All right, Howard, if you don't mind, pull up a chart for me. I'm going to talk about what we've been talking about for a week now, and I'm going to do it again. It's Tesla. Pull up a 3-hour chart on Tesla, and you'll see exactly what I mean. This thing is just setting up for a sell-off all the way back, at least back to 400, if not more. This thing is about to just drop. Yesterday, most of
I like to call this the Bart Simpson.
Yeah,
his head goes up, he goes like this, and then what happens is he comes right back down to his ears.
Yeah. I think this is what we're about to see here. Yeah, this is pretty much. To me, it's a done deal. I think we're going to see a pullback here. It looks like.
Yeah, I can't argue with that one. That does look like it's set up for it.
There's a big sell-off this morning in gold and silver. I think that the people were just moving around. That hit $43.
We are open here. Here we go. Q's open up exactly flat. Now moving to the upside slightly, 591.40. Tick is negative. Advanced decline opened up 1,748 to the top side.
All right, I am now. All right, I am now short Tesla here. I think I just hit it. Give you that number there. No, it's still open here. I'll let you know what the numbers is here.
Yeah, I'd be looking for a gap fill down towards 410 here to the downside. Gap fill to the downside.
Yeah, I'm in at 416 a quarter here. So it's going to be all over the map for a little bit. Let it run a little bit, but
yep.
I don't see anything going on here with this thing. This thing's probably going to just
DXY moved to the downside on the cash open. Gold is actually starting to recover a little bit here now. Same with silver. Bitcoin still bottoming out, 116,276. Ethereum 4,500. WTI 64, so regaining a little bit of strength here today also. Steve, Apple up another 0.5 percentage point here.
Oh, 415.86. Oh my. Okay, hold on here. Howard must 414.82 here. Howard, I'm going to take that.
Hold the 410. Hold.
I can't do it, Howard.
I said hold 413. Jeez.
Hold on. Let's see what I got out. But look, yeah. Come on, Howard. quick buck there. Quick. I mean, I don't, I don't play small numbers, so that was a hell of a morning there. For those of you who played with me, congrats. You just nailed that one. That was pretty obvious. Yeah. Let's see where I covered at 414.50 there. Did I do okay? Yeah, it's okay.
We'll see in a second. I think you got 410 in the next 20 minutes.
But for those of you who are, that's what I'm trying to say. Look, this setup for the 3 hours is if you want to go longer, I can't imagine that Tesla is looking good here. It doesn't make any sense to me here. Almost 42 back on silver there.
Tick is positive 143. We see the Qs have moved to the downside. Dow Jones are up 41 basis points. Nice move to the upside and towards the high of the day, trying to regain 4,600.
What stocks are we talking about today? Disney and Royal Caribbean. Guess what? They're up. Yeah, we could see a little bit more selling here in the Qs. It looks like that's what we're seeing now. People are nervous. I don't like trading on these nervousnesses. I might just take this money and run and just be done with it, right? I mean, this is...
Yeah, that's what you say. You'll be tempted into 7 more trades on Tesla in the next 10 minutes.
Qs are still selling off here. Yeah. Nike's up a bit here. I like that. That's
NVIDIA getting a hit here today.
Of course it is.
Yeah, 1.63%.
When you hear the CEO of NVIDIA, Jensen Huang, saying he's disappointed, that's a problem. Oh, we could see some more selling here in Tesla. Oh, look at that. Look at that drop. Do that again. Raise your hand if you play with Tesla with me on that one. That was pretty easy. Apple is up another buck now, 239.25 here. But we could see okay, drop here. Up there it is, breaking the lows today now in Tesla. Qs are now lows today.
I wonder who could have guessed that.
You did.
Sell. Hey, listen, it's easy to say when it's not your money. Believe me.
we got some selling to do here. I think Q still selling here. 413.5 there. Oof. 413.19 now. Oh my. 413.12 was the low of the day there. The session, I should say. Okay, so. Wow. Nailed that one this morning, though. I'm really happy about that one.
I will say on the 5-minute, it's got the bottom of the linear regression going with it a little bit, but it still looks to me like it's got more downside. I think it's going to fill the gap.
It might. A 42 almost on silver there again.
10.
We could see silver right back to 42 here, really right breaking over here a little bit.
I'm trying to catch circle here. On a little
TI,
call spread.
$4 a barrel here is holding. Yeah, 414.20 now. ADD. Okay, there we go. Ron talking about ADD again. I kind of like that. So we're now at 1247 there, Ron. Yeah. Yeah. Oh, we keep
tick up 260, tick up 300. Advanced decline now 23.52 to the upside. So we are seeing some definite moves to the upside, like you said, Ron. Dow Jones trying to break. Here it goes. Back above 46K. Oh, then I said it. Dow Jones, SPY at 660. Q's stuck around 590 right now. The rut is up 34 basis points. Also, just a little bit of a pullback on the VIX here to 16. I'm not in a trade on that, so I might look to get on some if it does pull back a little bit further here. I want it in the 15s, though.
Bitcoin at 116 now. Trying to hold.
Yeah, I said short-term selling there, definite on both. I'm looking downside today. Bitcoin, I got my buy set at 113, so I do think you could see 113.
That's down the lows today now. Oh wow, That was a nice setup on the 3-hour chart. If you look at the 3-hour chart again on Tesla, that thing is just, it told you everything this morning. Remember, the threes with the threes. Look at that.
Steve, we didn't talk about Lyft, although it's pulling back almost all or half of its gains. Lyft teaming up with Waymo to launch autonomous ride-hailing service in Nashville next year, utilizing Lyft's fleet management for vehicle upkeep and infrastructure, had them jumping up to 2350 here this morning, now only up 9.76% at 2218 and sort of towards the lows of the cash market so far. Workday on an upgrade has a nice little jump today, up 8.31%. And also after Elliott Investment announced a $2 billion stake in it, showing confidence in the company's leadership and strategy. SAAS seems to be back in vogue again this week, Steve, huh?
It does. It does. Yeah. I want to quickly turn something here. Lululemon, LULU now up 1.5% here. Looks like it might try to close that gap from the sell-off from their numbers here today. That thing's a big turnaround here. Q's starting to find a little bit of bottom there.
The other thing, Chinese names are all up big time today. Baidu up 6.6%, KC 5.98%, PDD 2.55%, ZG 4.39. Oh, that's Zillow. Zillow is actually up based upon a Bernstein upgrade. Lee Motors up 1.84% here also. So. And Steve, you look at your Tesla, look what it's at.
Yeah, thanks, Howard. I appreciate that. That's right.
I told you I can trade your money. I just can't trade mine.
Yeah. 411.5 on the bottom. 411 now.
Yeah, this was where you say that things are obvious to you. That one to 410, boom, there we are.
Yeah, my bad, folks. I took out a little too soon, but hopefully you listened to me on that 3-hour chart. That was pretty obvious this morning.
Yep.
Pretty clean chart there. Down almost 3%. And I think you're going to start to see zero DTE starting to pile on here a little bit.
We'll say, Steve, you got to remember this Friday is witching. Look at that, 409. My 410 right to the T, Steve. Hey, listen, you taught me, so your fault, not mine. It is witching day this week, so we do have monthly and futures and options. So just something to keep an eye on. That's one of the reasons the VIX is sort of subdued, because you get to their rollover day. So I do want to point that out. And that's why the VIX, while it works, is a little bit of a broken instrument.
Berkshire Hathaway is up 0.5%.
Saw some articles talking about the rotation, that Berkshire, John Deere, some of these really beaten up names, now is sort of the time to do it. I was going to ask you that before you went scorched earth on our economy and the state of affairs. So I don't have a reason to ask you if you thought this would be a good time to buy John Deere anymore. But
John Deere's different situation. Look, John Deere it has been beaten up.
Yeah. So I mean, how much more can you tariff it? It's already done. Everybody's done their damage. So that's what I was looking at personally. I do think that it might be time to take a look at John Deere personally. And then, like you said, if we're going to hell in a handbasket, RTX and Lockheed Martin and some of those plays. What was it? AeroVironment that does the drones.
Yeah, AeroVironment.
Yeah. Are those plays you would look to secular? As you said, you're going to look to sort of calibrate your stuff. Are those some of the names maybe you would look to recalibrate into?
I'm looking for places in the world that are safe. So my thought process here is places that aren't under regime change or issues like that. And I said Australia, places that seem to be, I'll tell you, if you really want to get serious about it, is Africa. Africa seems to be the place where I really do like. I am going to start moving some money into Africa. I think when you look at it from the perspective of China, and while China has invested quite heavily into Africa, Africa could be a great place to start to move money into.
Okay.
Tesla's starting to hold a little bit here, 413 now. So I might, that drop this morning was a nice little drop. Yeah, Howard, I might look at it again here. That 3-hour chart went right to the number.
Slightly negative right now. Advanced decline at 27.38. A little bit off the highs of 28.82. DXY continuing to drop down. 96.72. So it hasn't broken below the levels Mr. Flanagan told us to watch, but we are flirting right with them again. So we'll be talking to him in a few minutes and discussing that. Steve Flanagan says you can invest in Iceland. You could do that maybe through William Grant, who owns the vodka from Iceland. That's the only way I know.
Tesla's interesting here.
Alibaba up 1.62%. Baidu now up 7.18%. So again, current administration has China strong right now.
Yes.
IQ up 2.64% today.
I think I am. I think I'm going to hold off. I really want to see what the Fed has to say today. Bitcoin is still below 116 here. Qs are trying to hold here, but they look weak here.
NVIDIA now down 2.6%. AVGO down 2%. So chips are definitely getting here.
That's funny. Yeah, we keep it up. About to start learning Russian. 412. Tesla's really.
I'll say it again. That 167 area for NVIDIA always interests me as an area here.
I mean, NVIDIA down 3% today. That's
what I'm saying. If it gets a little bit lower here, I will look to add to my long-term holding there. I know it's a little risky, but
look at Ron. That's right, Ron. No trade is a trade. That's
absolutely. Yeah, that's in my morning watch list. I preach patience. I think things are pulling back to a decent
Bank of Canada
level.
now cuts key rate to 2.5%. They are matching their estimate now. Bank of Canada now cutting their rate now by 25 basis points. So it's the decision here is 2.5 versus 2.75. So it's all over the place here. Yeah. But that was expected, obviously. But I don't know. Tesla's getting very interesting here again. If it cannot hold up here, Howard, we might see it again. Let it get up there to about 415-ish.
Chipotle up 1.5 today.
Boy, Tesla is really weak today. There it is, 414.10.
Microsoft and Amazon a week also today. Tesla and Meta are trading similar too.
Views are trying here. $414.25.
Tech sector and consumer discretionary, the only two sectors of the S&P that are down. Consumer staples and utilities are the leaders so far.
Macklem of Canada says that there was a clear agreement to lower interest rates. So
Bitcoin did regain 116. Ethereum trying to regain 4,500.
41.97.5 there on silver. We're about to go back to 42 here on silver. 414.5 now on Tesla. Getting very close to possibly another short here.
Lyft is shot back up a little bit here, so pulled back down most of the way. Now moving back up. Workday still holding up at that 8% gain. Figure up 5.98%, Steve. That's now trading at 42.90. Woo. $9 billion valuation.
415 on Tesla there. Get back up there, baby. Get back up. It's a weak day in Tesla. It's 414.67. Get back up there.
Open Door now up another 5.83% here this morning. It was down in the pre-market. Same thing, SSRM was down in the pre-market, now up 1.58%.
Marilyn says she took your circle trade there, bro.
There you go. Love it.
All right. One little drop here in Tesla, and we're going, baby. 415.17, 415.09, 415.10.
UNH moving to the upside today. Robin had a nice little move to the upside today, up about 1 percentage point. UNH regained 340 here. Banks all moving to the upside today except for Wells Fargo. Every other bank on this list pretty much up. Tick now at 350.
Short on Tesla here again.
Okay.
And
Holding up so far. Why don't we bring Mr. Flanagan in while we're watching this? I'm going to switch our screen to this one. Mr. Flanagan, how are you doing today, my friend?
I'm doing well. First of the central banks is cut the rates 0.25%. What about the Fed? What's up next?
That's the question. What's going on next?
You're here. Let us know, man.
I've got my perma bull in the room now to battle my perma beer on the other side. So I'm going to stay in between you two. What do you have to say to Mr. Orr's comments earlier? I know you were listening.
Yeah, I was listening, and
I'm going to give you the full screen to get to do this.
Okay, all right. Well, so here's what we got. I don't think Steve's wrong. The odds are the Fed's going to cut 0.25%, And we. I mean, come on, guys, 0.25%. Let's go, Fed. Get with the program here. And I think the markets aren't going to look at it very positively at all. And unfortunately, if I were somebody in the central bank, I would say, wow, that didn't seem to go over well. But they're not going to do that. They're basically in their ivory towers, and they're not really concerned about asset values and everything else going on. They're on a course, and right now their course is probably, as I'm going to watch, 0.25%. I'm going to watch the dissenting votes, because that's going to tell you just how politicized the Fed has become.
Agreed.
Because somebody is criticizing them and exerting pressure that, guys, get with it. The labor market's weak. Okay, well, now all the numbers are out. And guess what, Fed? For months you pounded us with, we're going to wait for the next labor report. Labor's strong, can't cut rates, inflation can go higher. Well, that whole theory has just been like swiped out from under them. So they're going to cut 0.5% today.
Oh,
because
what?
they've got to get with the program. Now,
are you sure it's not wishful thinking there, Steve Flanagan?
No. Well, Steve, yeah, of course it's wishful thinking. Yes, the odds are it's 0.25%. All the institutions, if you see all the banks on, the big networks, the bobbleheads, it's baked in at 0.25% because they don't want to be disturbed, because they're all positioned for 0.25%. And trust me, the stock market will sell off and they're all going to get rewarded, because everybody's a hyper bear right now saying everything in the world is overextended. Okay, so let's back up, because between today, Bank of Canada, first one up, cut, and Friday, wow, are we going to be in a twister? So we got the Fed up next, probably 0.25%, drops it down to 4.25%. Then Norway steps up. They're looking to cut 0.25%. And then you've got Bank of England stepping in. Bank of England probably goes 0.25% and drops under 4% as well. Then the Bank of Japan steps in. Most likely Friday morning while we're sleeping, Thursday midnight, they're probably going to hold rates in check because, suddenly their economy is a little question mark and the inflation is not roaring like they had hoped. It's dropping back under the 3% level. And then the big one. All of this shake and bake, the tectonic plates move underneath, which is interest rates and currencies, and the dollar is threatening in to this 96.65 level. And all of this happens, and then you get triple witching, and every one of the books starts to mature, and everybody starts heading in all different directions. You guys know full well what potentially can happen on a triple witching day.
Yeah, volatility.
So volatility is the place. So, Steve, I believe you could be right on this one. We could see on 0.25% cut and a total disappointment, because what are we going to get? 0.25%, then to go to the press conference. And what's Powell going to say? Oh, the conditions have suddenly changed that we can begin to lower rates. Duh. Like, yeah, we know that. And you think 0.25% is like serving the nation and giving this country what it wants and needs? Steve, you highlighted how difficult it is out there, grocery, blah, 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 all the prices and how people are feeling the pinch. So what is the Fed doing here? To me, they go 0.25%, they just paint themselves further in a hole. I'm watching the dissenting votes. I think you could end up with 2 to 3 dissenters again. And I think that starts to tell the real picture. What it does, that the governing council is falling apart and fracturing under Powell's leadership.
Let's talk about that for a second. We have a guy now, Mirren, who's now going to serve temporary and works in the administration.
Well, I guess that's the way you could paint that one. Yeah.
Steve, talk to me, man. That's almost criminal to me.
No, Steve, I'm not going to go down that road. I do see, yeah, I do see the parallels that you draw in here, and it's easy to draw that picture and make sense out of it. Sure.
We're up as hell to me.
Again, Steve, I come back to it is not about the administration, the executive branch trying to dictate to the Federal Reserve. The Federal Reserve independence is paramount.
How can it be independent when you've got a person literally working in both?
When you get this guy in there, what I would say is being attempted is accountability.
Or takeover.
Let's not mask how bad the Fed has been in their calls.
I don't like the Cardinals losing, but that doesn't mean I get to change the rules of the game to win.
Influence them, get some rational thinking in there. I think that the Federal Reserve bureaucrats, they're too textbook driven, and I do think they need a wholesale change. Does that mean that we're going to take away the independence? No.
Well, you did.
I don't think so, Steve.
Okay. All right.
And I think even in his testimony, he also
you set precedents. It's never happened before.
There's a lot of things that have happened.
When people ask me all the time about, why is the Senate the way that the Senate is? And I say, look, the problem is still the same to me, is that you want to blame somebody, blame the Democrats. What do you mean blame Democrats? Republicans are the ones that blame Democrats. Harry Reid, for since the beginning of the Senate, in order to somebody get passed through, it had to have 60% or right. That we call the nuclear. They blew the nuclear up. So now it's 50. Now it's just 50%. Now 47 people voted for to get him in. That never happened before. So there we are. So now we are seeing a very divided everything now.
Yeah, and I think that the dollar's value is kind of highlighting because the value of the dollar for our viewers is like the international world voting.
Well, you're not voting very well for us.
Not voting very well. No, not at all right now. But money moves first, and watch how fast that's going to turn around.
I think you're right on that. I think that there will be a dollar move strongly.
You got three things going here under the surface right now. You got one, TikTok just seemed to be resolved. That's big, I think. That's a big agreement between United States and China. Two, you got Trump and Modi out there suddenly percolating now, and that could be another very big one. The largest democratic country in the world with the largest middle class. There could be all sorts of good news out of that. Third is this Trump UK. I mean, he's in a plane, hasn't even landed.
Yes, he landed. He's there.
Yeah, now he is. Now he is. But last night, all of a sudden, Microsoft comes out and announces.
But where is he at? He's not with Keir Starmer. He's with the king.
Oh, yeah. Well, and he's got his wife in tow. So doesn't matter. Look at the tea leaves. Microsoft and NVIDIA suddenly make these two announcements as his plane's landing.
Yeah, true.
And suddenly the UK becomes what? Maybe, potentially, a data center, a high-tech capital for Europe? Wow. And then the last thing I need to throw out there to you guys. Who was the one person that came out 1 year ago yesterday, right before the ECB went on to their tirade of cutting interest rates?
Yeah.
Mario Draghi, former head of the ECB. What did he say yesterday when he went back before the EU Commission on European competitiveness? He basically said, what have you people done in 1 year? Nada. Zero.
Yeah.
And Europe is now slipping behind. I have them all the quotes down. Europe is now slipping behind further due to, listen to this one, due to government complacency and inaction. Now, I know everybody loves to talk about getting out of the dollar. The dollar is the worst place. The next place is the euro to go in because the euro is everybody's new safe haven play. Wow, is that going to crack? I'm not going to, I am a bull in the dollar. My chart pattern has broken. The dollar index broke below the levels I've been talking about. We no longer have higher lows in place. What we have left is the last level of 96.65 on July 1st. And when that level breaks, the dollar is going to slip to new lows. And that's, well, if you look at it from the U.S. point of view, U.S. goods all get pretty damn cheap to the world.
That is what we talked about yesterday. The thing that I love about the Dixie being so cheap now, it is that Barry's thing that our products get very cheap. Yeah.
But do you want to be an asset holder in a currency that's devaluating?
No.
Right? I mean, okay, I'm in the U.S. stock market. It's going up, up, up. But the value from an international point of view is getting eroded by whatever percent the dollar keeps.
But they can say, hey, I can buy the dollar and buy NVIDIA stock, and I'll win both ways, right? A double whammy, as you said on Monday.
As the double whammy, and that's once. So what am I doing right now? My chart pattern is broken. I am definitely stepping aside here, but I'm watching one more last level here, 96.65. If that breaks, I'm looking for a crater. Could drop 100 points. But again, I want to step back in because when we talk about a weak dollar, if you put that into a monthly chart and then you look and say, just how weak is the dollar? When you look at it from a historical point of view, the dollar's not that weak.
Historical, no. For historical, no. I agree with that on that.
Yep. I mean, when I started trading dollar yen was 340 to the dollar. Today we're down at 146.30. So you could say that remember, the dollar's only started free trading in 1971 when Bretton Woods broke and the gold window was closed. You could really say that the dollar is not a very expensive currency in its historical 50-year plus view. So I don't like the dollar down here. I think it's a bad signal. In order to get the bullish scenario that I want, the perma bull that I like to be.
But it is what Trump wanted. He wanted a cheaper dollar.
Yeah, but Steve, then I come back into your ball court with Bob Rubin, and Bob Rubin nailed it. Bob Rubin came out and started saying, I want a strong dollar because a strong dollar supports your debt market. A strong dollar reduces inflation in the U.S. and makes your debt more attractive and makes your whole country more attractive. So that's
nobody wants to buy our debt when our dollar's cheap, right?
And that was my point with you guys last week, that the window of opening is what they're doing here, allowing the dollar to drop, and all this money that has been talked about to come into the U.S. Howard says, well, show it to me. Well, it's basically, to me, sitting and absorbing in on these moves down, and they are getting the free ride to the cheaper dollar.
That would make sense.
But a big day. Interest rates throughout today.
India's government, India Prime Minister Modi looks forward to welcoming Russian President Putin to India later this year.
Oh, boy. Here come the bricks.
What were you saying earlier, Steve? To me, I think I forgot.
I'm not worried. I'm not worried about what does Russia have to offer India? Oil? Okay.
Yeah, it's China that what you have to worry about. But Steve, I have to ask you a question. I'm looking at the charts on your weekly. Is 95 if it breaks below? Is that what you're looking at here?
So I think, what are we right now? 96.70?
Yeah.
Okay, so I think I think 95, I mean, right now you're just punching pieces in, but I think you have the correct line drawn there.
Yeah, I'm looking at what was support back in 18 and 21 was resistance here in 17. Looks like a line in the sand to me a little bit.
Is that about 95?
Yeah.
Yeah. So, I'll always use a little bit of discretion. I mean, that would be awesome to see a 95, 94.75. But, you know, my view would be if we do begin to break, I could see 100 points lower. And any lower level of 95 would be where I would begin to put my heels in and rebuy. Because I'm 100% convinced about what the game plan is. And the game plan will be a reflation of asset values throughout the world, which you are seeing in gold, silver, and crypto.
That's what I'm talking about now. Where do we move to? Because that's what I'm thinking. Where do I start moving some of this money that I've allocated here?
Well, you said before, Steve, you moved into Europe and you moved into Japan. I like Japan in the bigger picture.
Right.
Europe, I'm not very big on at all.
Not now. But yeah, I mean, so I'm saying I may be moving some of that out of Europe, into somewhere else. And I'm looking.
So you look at suddenly the U.S. and India going to meet, and you look at where India is. You could say that the weakness of India's currency right now at all-time roughly highs might be a play there where you could be invested in India and catch some of the move. That might be one. I do like
the rupee is just so cheap right now. I like the rupee here.
I do like China in the probably 6 month ahead window because I think China, you know, pushing so fast in this AI space is really catching a lot of. So there is a ETF that I looked up and I've been in now for myself for the last 3.5 weeks called Dragon, DRGN. And I've been looking at that as a way to play the whole China high tech play. So, you know,
DRGN, got it.
DRGN, yep. You know, that's something that I've been watching because I do think China is a leader in the space, and they're punching in huge. And you're beginning to see some agreements here in the U.S. So China, no question, wants to develop its own chips. So a lot of the companies that are in that high-tech space in China, from what I could look at, are in this particular ETF.
Makes sense, yeah. I like it.
Yep. So, you know, get ready for some pain is the way I'm looking at it. I mean,
I'm saying. I agree with it.
I'm beaten in the dollar here. But you know, I'm staying focused. I'm out. I'm flat, but I'm staying focused. I did see Draghi's comments overnight, and I did hammer the euro, but I've taken almost most of that back right now, and I'm kind of waiting on the Fed, and I'm going to be very disappointed with a 0.25% cut. And then how's he going to explain that as him trying to help the United States labor situation? Like, it's like
what do you think the first question is going to be to him today?
Why a quarter?
The whole world knows it's 25 basis points.
Yeah, but why not?
And there's 4% and Steve Flanagan who think that.
And we have 30 minutes roughly, so he can clean his sweat off, put his purple tie on, come out. You have 4 people that pretty much are going to be the ones who ask the first questions. It's either Bloomberg, Reuters,
Leishman,
maybe Steve Leishman from CNBC. You're the first person, Steve Flanagan. You have the microphone. The girl gives you the microphone. He looks at you and with those stern eyes, and he knows he's going to get grilled. What is that question that they ask him? Because that's the question that the whole world is waiting for.
Simple. You have hammered home the labor market time and time again.
Yeah.
Now the BLS revisions come out and show that the labor market has been a lot weaker than the Fed has forecast. Why? And why is a 0.25% your answer and not a 0.5%? Drill them. Give me an answer to that. You were able to cut a 0.5%.
Do you think with everyone in the world knowing that he's out in March, with everyone knowing in the world that Trump's nailing him pretty left and right, he's pretty weak right now. He's still chair, so he's still got the power. Do you think he backs down?
Yeah, I do.
So
that's why I'm going for 0.5% today. I do think he backs down. I think he succumbs to the pressure. I don't think that, when I listen to him speak, I don't see a lion in him. I see a sheep. Like he may hide behind his political view, but then Trump was the guy who appointed him. But he may hide, but he's got to answer to the American people now, not Trump.
Does he?
Well, yes, I believe, because it's the American people that are the ones that are.
I'm going to posit this.
Okay.
I don't think anybody is accountable right now to the people. Trump is not accountable because he is not up for another election. Powell is not up. He's out. He knows it. I think there's no accountability.
Well, I would have to differ there, because
where talk to me where it is, Steve, because you know what, how can we pull him out? Is it going to be the Senate? Is it going to be SCOTUS? I think there's no accountability right now. I think they're doing what? Okay,
he's going to serve his term. They're not going to pull him out because that would be havoc.
Right.
But I think Trump has been very accountable to his election on what he has to do.
I agree with that. I agree. He is doing what he's saying. Look, I whether I agree with Trump or his policies or I don't agree with him his policies, you know what? He is, and he lies. Let's be honest. I'm going to say it right now. Trump is a freaking straight up liar. Okay. But he does do what he says he's going to do. He says, okay, I'm going to do these things. I'm going to do it. Now, how I get there, I don't know. I'm going to tell you 50 freaking lies, but I'm going to do it. And you've got to respect that as a president.
Well, we call them perhaps little fibs, lies, or whatever. And people in his position,
straight up lies. Straight up lies.
People in his position out of the real estate market, that's just their way of saying, this is my truth.
This is my used car salesman position, right? I mean,
that's right. I'm telling you, this building is as sound as could be. You got to buy it now.
And you probably make money off of it, right? And you've got to respect the president when he says, I'm going to go do this, and he does it. But how he gets there, you're like, what in the world is he doing? Like, it doesn't make any sense. And he usually fails, because it's what he does. Mostly almost everything he does fails. Name me something he's actually made money at that continue to go on. I mean, it's what? Trump University, Trump planes, Trump everything. But he does tell you, and he is very, very animated, and that's what people watch. So when I say he's not accountable, who is he accountable to?
Himself.
Okay. He's accountable to himself. No, I don't buy that, Steve. I mean, look, okay, he's accountable to himself. What? I mean, I don't know. I don't agree with that. Steve, when I'm trading, I'm trying to make money, right? I invest to make money. So I have to think about what the president says. I have to think about the policies that come in play, that he puts in place. He said, we're going to tariff the hell out of everybody.
And he did.
And he started to, right? And he going to do it 100% and 500%, and we're going to down 500%, which can't even go down 500%. And he did, but he only did it 25%, only did it 50%, and 25, it ended up being only a little bit, right? So so let's talk about that, if that's the case.
Steve, you've got a unique thing going on here in the United States, where every other place in the world has blended, whether you call it an oligopoly in Russia, in China, you've got a state-run business. In Europe, you have quasi-run businesses. The electric companies kind of owned by the government, but kind of public. All over throughout the world, you've got these type of business / government where the government sets the guidelines and the businesses go out and execute. And now the United States is getting much more active in that sense, except the United States is 20, 30 times larger than any of these other places.
That's right. But
so
that's why again, BRICS is coming together.
But this is a deadly combination that could, and I believe will, just out-competitive the entire world, hence my theory and my thesis as why the dollar down here is in the dirt and is a great place to be, because the U.S. is leading into the next century of high tech, all the money being put into it. The U.S. businesses, R&D development, they're just pouring money in, and it's all being guided and led by the government. And then I just look at my administration, and I've got 4 guys in there. I think there's 4 cabinet officials that don't take a salary. They're all billionaires, and they've all got a vested interest in this.
I mean, when I hear the words, "Oh, they're not taking a salary from the government," and I go, "Okay, Trump didn't take a salary, great, but he made billions off of crypto grifting." I mean, it's okay. He's giving up his $400,000 to make $1 billion. You know what, Steve? I'll do the same thing. Thanks, appreciate it.
Yeah, I know, but it's a nice gesture, right? It's taxpayer money.
It's a nice
money.
Boy Scouts of America are very happy that he, give me the $1 billion, Mr. President. Don't give me the 400,000. Look, okay. If let's just say all of this, it goes into fruition. We get the quarter point. Let's just say you get your 50 basis points today.
Market rockets.
I think market crashes.
Because you're looking at the fear factor.
I'm scared as shit. If they have to cut 50 basis points, then they know they made a mistake. And what else do they not know that they didn't? And we all know they made a mistake because you said earlier, right? And I agree with you on the jobs. They were wrong. I told them 1 million times, I'll give you a copy of Quasar Markets. It's not hard. I'll give you the data. We knew a long time ago. We knew it years ago. All right. Let's say they get the 50 basis point. Let's say President Trump gets his way and gets 1.75. 175 basis points. It's what he wants, right? He said 200. I was like, okay. Let's say he gets it in between here and January.
It's not going that way. No chance. A 0.5% would be a great start. They've done it before, right? We've done it, last September?
Yeah.
Yep.
Okay, so if the conditions then were ripe to cut a half, certainly the conditions after being on a pause for such a long period of time are even more ripe. So I'm not doing my view is not based on anything that they have not done before recently. I think they go a half, and that's basically in their book. They're pretty much done. I do believe there's another 0.5%.
So wait, you're saying that if they do the 50 basis points now, they're done?
Well, they'll definitely do a pause. Let's see how that affects things.
So 50 now,
maybe a quarter left.
That's interesting.
I don't think interest rates at the present rate of 4.5% have more than 100 basis points to go. I don't think you're going to see rates any lower than 3.5%. That's to me is the bottom. So they go a half now. They're easily in the catbird seat by saying, now we wait.
All right, let's put that into Main Street numbers then. Howard sitting here, he can't wait. His wife needs to refi. Let's just say they get down to 3.5. Is that where you're happy, Honda?
Oh, very happy.
Okay. So do you think that is what Trump is pushing for, is to make Main Street happy right now?
Yeah, he's got to do something to make him happy. But yeah, I do. I think that, I don't know. I think that his answer and the Treasury Secretary's answer is what you just described as their lever to try to make housing more affordable and things like that is to force the hand. Yeah.
And the U.S. gets to finance its deficit at a lower,
lot cheaper, which is a big deal.
That's what I want to see. I want to see us starting to, but Steve, when you do that, who finances it?
Well, we can finance it.
Social Security, because that's what who mostly finances our debt, right? I mean, our debt's mostly financed by our own money.
Remember, if you begin to have a growing consensus of a lower long-term rate, then as a bondholder, when do you quickly jump in to buy, given the value of the dollar right now, because then you get an appreciation in the bond market and a dollar appreciation.
So what Steve Flanagan's saying, for those of you that don't understand, he's saying that international money is very excited about buying our bonds right now because it's a little higher rate and lower dollar, but makes so they get a double whammy. It's the big thing. And I think, okay, so we lower rates, Dixie still goes down.
You could see the Dixie suffer. I don't think you're going to get much lower. But you know what, Steve? I don't disagree that if they go aggressive on interest rates because the deficit financing becomes more of a weighting in the seesaw, the dollar could suffer somewhat. Yeah, you could see the 95 level that Howard pointed out there. And also the financing of your short dollar position gets a little cheaper. Remember, finance, when you sell the dollar, which is right now a 4.5% currency, the other side to selling the dollar is you're buying something. So you buy the euro, but the euro is a 2% currency. So there's a net today 2.5% difference. So you need the value of the dollar to be dropping to make this a longer term profitable trade.
Steve Leisman says to you, hey, labor is not quite where he thought it was going to be. We're down 1 million. All right. You're wrong. What else are you wrong on?
Oh, there you go. Inflation.
He's going to say inflation because he's not going to agree to that. He's going to, we've kept inflation in check, blah, 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 blah. That's what they're saying now, right? What else are you wrong on? I think when you look at the Fed in general for the future, right? Trump's wanting to change the Fed to the way that lowers rates faster to his numbers to get a house. And I want everybody to understand this. Trump's a real estate guy. So he likes low rates. He wants to borrow cheap and invest and buy things and then sell it and then do it again and not again and again. That's what he does, right? That's how he knows. That's what he thinks. And he's right. Because why? We talked about it earlier. That the biggest asset class in the United States is real estate.
That's right.
How does that affect that person who still doesn't have a job, who wants to buy a home, is watching the Fed, doesn't really understand what we're talking about, maybe might be lost right now and said, okay, I don't understand what the hell they're talking about here. Break it down, Steve, for the actual Main Street person that just is getting by in life. They are working. They are doing everything right. They go to the bank and the bank says, we'll give you one at 6%. Oh, you want a car? Great. But okay, your rates are higher. All right. Break it down for them, Steve. If you were to put this into a high school level so that everybody can understand this, what is it that's going on right now so that they can understand how they can position themselves for the future? I want to buy a home. I want to buy a car. I'm just trying to get by in life. I'm on Main Street. What do I do?
Yeah, I've got a couple of kids out there, in those categories. So I talk to them all the time about this, and I kind of say, listen, you got to get yourself in a field, in a service type field, 1 or 2, a trade, because these aren't going away right away. I think some of the bigger hurting is going to be some of the white collar, college educated jobs, because AI is clearly going to be a threat there. I think interest rates, they want it to come lower so that people can afford these things. I think there's a lot of things in the future that everybody wants to be able to take advantage of, and that is the technology space. If I were a young kid and I'm a little down and out right now, which, I've got a couple of those, and, you got to, start looking into the junior colleges where the tuition is much, much cheaper, it's more state subsidized, and begin to look into some of the trades or some of the tech positions where you could take some courses, get qualified. One comes to mind is HVAC. With all the new homes being built, the HVAC systems are incredible, and these technicians are very hard to find. So there is hope, but it's got to trickle down. And that's why I think the emphasis is quickly moving to the housing, as you say, because 1/16, I think it's 1/6 of the GDP is related to your housing market. So what sort of boom could we get? Well, every time you get a house that sells, you immediately get a tremendous amount of people that have to come in first and building them. Like I said, HVAC, electrical, plumbing. And this is where the majority of the American people are making a living at. And these are the jobs that I would seek. I wouldn't look for, I've got a grandson right now who just graduated from high school. And about 2 years ago, after I went through the whole thing about going to college and doing this, and if he wants to get into finance, and he looked at me and he said, Grandpa, not really interested in it. And I went, okay. Your high school has a BOCES program in New York, or a technical school, which coincides with. And he ended up doing it. Kid gets out, he's an electrician.
Yeah.
He's making more money than ever. Always friends, right? I mean, I love that.
And he's making fantastic money, but he got a job immediately.
Yeah.
Right.
So, what's the path that we all took? Yeah, get out of high school, go to college, get a degree. But don't get a degree in, and I don't mean to belittle it, but English lit.
But Steve, but I want to live in an economy that is higher educated.
Okay, but who's to say without a college degree you're not higher educated?
That's a good point.
Right? I mean, today people can tune in right now onto Quasar Markets and get all the financial education they want all during the day.
All three of us have a college education.
Okay, but
several. So it's like, okay, but we also have an education. But would J.P. Morgan have hired you back in the day without an education?
Back in the day, no. That was part of the job that I took, was a college undergraduate degree.
Right.
But now, I've seen the automated systems and the automated decision making begin to sweep through the financial markets. And I don't think as a kid I would necessarily be looking to do a 14-hour day, first in, last out, in a trading room, knowing that these machines are going to be doing a lot of that work.
Agreed. Man, what a great session today. I thought this was very good, very educational, and I think I'm probably going to break this into some definite Instagrams, because I think that right now there's a lot of scared investors out there that are rolling the dice a little too hard, right? They're pushing the line a little bit, and when they're looking at their future, I think a lot of people are saying, you know what, I don't know what the future is, so I might as well just go bet on sports, and I might as well just go buy meme coins and buy. And as I saw that commercial earlier, ride the bull. I was like, ugh, right? That's not the future, right? That's putting your future in the stakes of your own hands of somebody else. Like, it's not good.
You want to be an
investor. You want to be an investor. That's right. Yeah.
I'm sure everywhere how it goes, I'm sure everybody says, hey, should I buy Bitcoin today?
Yes, you should.
The answer is always yes. Correct.
Always yes.
Although actually not today. It's still going down. Don't buy today. Wait a little bit. 113. Get it at 113.
Thanks. Sorry. Thanks, Howard. All right, Howard. 10:30. We really went over our numbers today, but I thought it was a really good one today, and definitely a lot of people were watching today. It's over 1,000, so I like that. All right, Howard, take us out, my man.
Okay, everybody. The markets are down. Q's at the bottom of the daily trading range so far. We've got the Powell put to look at 2 o'clock. Although I don't feel like it's a Powell put day. I know my man Charlie Moon is warning people that it might be a little bit of sell the news today. We'll see what we get here soon enough, but be nimble. And I'm going to let Mr. Flanagan, you always tell us what Jack should do. What should he do? What should the traders do today?
Don't get caught on the candlestick, my friend.
That's right. Everybody have a great day. We'll see you in the morning.